Good morning. Welcome to Stock Market Today. It's Monday, February 10th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities finished lower on Friday, near the worst levels of the session, but still added more than 3% on the week. Materials, tech, and healthcare were the worst performers. Staples, comm services, and REITs outperformed. Treasuries were stronger with the curve flattening. The dollar was stronger against the euro, but weakened against the yen. Gold closed up 40 basis points, and WTI crude finished down 1.2% on the day. As we get to the desk this morning on a Monday morning, futures are flat to start the week on the heels of that strong rally last week. Asian equities were mostly lower overnight, though China did finish higher. European equities are trading lower. Treasuries are stronger across the curve. The dollar is little changed versus the yen and the euro. Gold is adding 30 basis points, and WTI crude is down another 80 basis points after finishing lower for a fifth consecutive week last week. And as we dive in and look at the structure of the S&P 500, stocks fell on Friday, but still added more than 3% on the week. Support is still in that range between 3,200 and 3,250 that really held strong over the past couple of weeks without giving up bullish momentum. Now, we do appear, or I'm asking the question, are we carving out resistance near the 3350 level? It could be. Right, Friday's close was kind of interesting because it set up a little bit of what's known as an island reversal up here near the highs. You also, for you candlesticks folks, Thursday's trading pattern was a doji in a candlestick lexicon. So what does that signal? Maybe some indecision up here near the highs. What I'm more concerned with is this divergence that's in play, right? As the market made a new high on Thursday, now we've been talking about it. The RSI made a lower high, setting up what could potentially be a bearish divergence on the chart. Now, Chaikin money flow is still bullish. So for now, we're just watching the divergence, and really we're watching for the RSI to hold within bullish ranges on pullbacks as it has done for the past few months. So that to me continues to be the key dynamic and development that we want to see. The divergence is in play. We are watching it closely. We're looking for tests of support to maintain bullish positioning for the RSI, as well as bullish Chaikin money flow readings. For now, I think in the short term, you want to really make sure you have your risk management process in line. If you're a longer-term investor, any dislocations that hold above support likely present opportunities to add quality stocks in leading areas of the market. Let's hit our market in a minute now. What are we writing about in our note to Chaikin Analytics clients today? Well, stocks trade near record levels despite those coronavirus fears and despite that pullback on Friday. Global growth fears do continue to weigh on the commodity complex. Safe haven buying sends yields lower, and the 10-year appears to be carving out a range. Now, lower rates could be helping the home construction space. And as I said, futures point to a flattish type open here this morning for the new week. Taking a look at the major indices from a power bar perspective, the Dow lost 87 basis points on Friday, still skewed in favor of the bulls, though, 7-6. S&P 500 losing 0.5%, 136 to 69, bulls to bears. NASDAQ down 43 basis points, 35-6, bulls to bears. Small caps are an underperformer, as they have been really since the start of the year. 469 to 272, bulls to bears, but it's that relative strength that's really giving us pause on the small caps for the time being. Bonds uptick, sending yields lower on the day. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish across the board. However, major markets are mixed. Let's hit our stock of the day now. Remember, the stock of the day is usually auto-generated based on the Chaikin Power Gauge rating. And Vectrus Inc., ticker symbol VEC, is the stock that they've given to us here today. Remember, I get the stock, it's auto-generated, and then I analyze it for you in real time. VEC closed at 56.44, down 3.26% on Friday. Its Power Gauge rating is very bullish due to very attractive financial metrics, strong price volume activity, as well as positive expert activity. Stock does have some weak earnings performance of late. However, when we look at the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. Stock is in a strong trend above our rising long-term trend line, and it's in a strong industry group. Space and defense has been a strong group based on its power bar ratio of late. Now, take a look at VEC from the bottom up. The ribbon tells us where the rating is and has been over the past 12 months, and it's been predominantly bullish, and the stock's been an outperformer. It's been leading the market since last, call it late March, early April, and the intensity of that outperformance does remain strong. Overbought, oversold indicator, rounding out of an oversold position. Money flow mixed to slightly bullish as the stock consolidates here after breaking to a new high. So for me, what I see is a couple different ways to play this. You can play the rounding out of the oversold condition, right, for a leading stock in a leading area of the market. You also have the breakout through the $55 level. If you're a breakout trader and you look for these breakouts to establish a position as well as set a risk management point, right, you're using $55 if that's your process. Right, $55 is the breakout level. As long as the stock is holding above $55, it remains a compelling opportunity. And if you're in the trade, you likely want to stay within the trade. However, a drop below $55 should cause you to reevaluate and manage risk. However, you choose to do that, right? Risk management really has to fit your process. But what I will highlight is the stock did trade at a high on Thursday before pulling back on Friday, and does remain above this breakout level at $55. So if that's your style, it still is a compelling opportunity. Taking a look at the sector tracker now, the movement of the major sectors over the last 5 days. Strong rally last week, no doubt about it. S&P 500 up over 3%. And over the past 5 days of trading, technology has been an outperformer, which is encouraging if you're bullish, as it is the largest weight in the S&P 500. Materials in what looks like a counter trend rally for the time being. Healthcare, another area of the market to which we've been warming and we continue to like. It did outperform on the week, as did another one of the groups that we like, Home Services, up 3.6% on the week. Financials and industrials, largely an inline performer. Discretionary REIT, staples, and energy, all higher over the past 5 days, but did underperform the S&P 500 on the week. And after a strong rally over the past few weeks, utilities have begun to kind of consolidate near the high. Slight underperformer over the last, not a slight underperformer, an underperformer over the last 5 days. And the only group that is actually down in absolute terms over the last week of trading. Taking a look at our industry in focus now. 21 subsectors that we look at, one of which is innovative technology services, which over the past 6 months has outperformed the S&P 500 by nearly 4.5%. And its power bar ratio, which measures future potential, is strong. It's got 17 bullish or very bullish stocks for 15 bearish or very bearish stocks. And it's currently ranked number 13 of 21 subsectors, having moved up one slot over the past week. So some of the names, some of the indicative names there: NetEase with a very bullish rating, iCore Holdings, ICHR with a very bullish rating, and YY. IOYY, ticker symbol YY, has a very bullish Chaikin Power Gauge rating. So there are 17 stocks within this group that have bullish or very bullish ratings that may present opportunities. Now let's take a look at the iCore. Was a good opportunity to highlight our checklist functionality today. iCore has a very bullish rating. It's in a strong trend above the rising long-term trend line, and it's in a strong industry group. Semiconductors do remain a strong group from a power bar perspective. Now, we normally read the chart from the bottom up, but if you don't want to do that, we give you this checklist. And the checklist really is broken into two parts. First, strength, then timing. Strength tells us if this is the type of name we want to own, right? Does it have a very bullish or bullish power gauge rating? Check. Is it outperforming the market? Check. And is it in a strong industry group? Check, right? So those are the types of names that we want to consider. Then we want to look at the timing, right? When do we want to consider them? Well, we want to consider them when they are oversold, above the rising trend line with bullish money flow. Right? And right now, our overbought, oversold indication is that it's early because the overbought, oversold indicator is still declining while in an oversold condition. This will turn optimal when the indicator turns higher within an oversold position. But for all intents and purposes, iCore looks like a compelling name on the long side of the portfolio. Taking a look at what's trending now. Friday's S&P 500 movers and shakers are gainers and losers. Norton LifeLock, earnings sent the stock higher by 12% on Friday. However, the stock was down roughly 30% on the week. National Oil Well Varco earnings sent that stock higher of 10.5%. AbbVie, good earnings there, sent that stock higher by 5.8%. FedEx, some positive news and an upgrade today. That stock was higher by 4.75% on Friday. T-Mobile up 3.25% on Friday. Our loser side of the board, Take-Two, really a tale of two cities. For the gaming stocks, Activision higher, Take-Two lower by nearly 12%. FLT earnings sent that stock lower by 6.75%. IPG Photonics, I didn't see any real news there to take 5.6% out of that stock. VeriSign reported earnings. Investors took 5.5% out of the name on the day. Stock does have a bearish rating. And DXC is a very bullish stock that had earnings send it lower by nearly 5.5%. So maybe potentially an opportunity there. You want to dig in and do some work on a stock like DXC on that pullback. Now, let's take a look at the charts. On Mondays, we look across asset classes to get a sense of what's going on, really across the different asset classes and what it means for equity markets, some of the trends that are currently in place. One of the ones that's been a big one of late has been the downtrend and recent weakness in the commodity complex. Taking a look at the Invesco DB Commodity Index Tracking Fund, you can see since the start of 2020, it's been in a precipitous decline. Now, it did tag support and actually give us a little bit of a bounce, but it's currently closer to oversold conditions than to overbought conditions, obviously based on the RSI. It's below a now declining 200-day moving average. And a lot of this weakness, in our view, stems from the fact that oil has come under pressure and crude is now breaking down. Here's crude oil breaking through support at the 52.5 level. And that's had a big impact on the commodity complex. Now, other commodities, the more defensive areas like gold are holding in. But the commodities that are levered to global growth, such as crude oil, have come under pressure. And remember, global growth slowing, the fears of global growth slowing have intensified in and around fears of the coronavirus spreading. And that's playing out in the commodity complex, as you can see here. Take a look at DBC. I mean, look at this decline from 1630 down to 1430 since the beginning of the year. Now, will this support level hold? Remains to be seen. So far, it is holding. Right now, we have a bit of a bounce, but again, crude's been under pressure. It was under pressure on Friday, and it's under pressure again this morning, and that's having a big impact on the commodity complex. So continue to watch that. What does that mean for the equity markets? Well, obviously, energy has been a bearish group here. We've been talking about it for a while. The materials group has also been under relative pressure despite a near-term, what appears to be a near-term counter trend rally. Now, the 10-year yield appears to be carving out a range. Right, TNX, we're looking at the CBOE 10-year Treasury yield, right? After bottoming around the 1.45% level back in the August-September timeframe, we saw a rally that met resistance below the declining 200-day moving average, which subsequently gave way and yields have moved lower. Now, partially yields are moving lower as bonds catch a bid and a bit of a flight to safety. Again, global growth fears, the coronavirus, etc. We're below the 50-day. We're below the 200-day moving average. There is support down here. Call it the 1.4515% level. Interesting to me that the RSI on the rally could not become overbought, never became overbought on any of these rally attempts, and has subsequently turned lower and actually became oversold on the most recent dip lower and remains in bearish ranges. So what does that mean? Well, financials could struggle on a relative basis. Bond proxies have been holding up well, but it's also, I think, had an impact on the chart that we are going to look at next, which is the Home Construction ETF. Taking a look at the ITB, the iShares US Home Construction ETF. First and foremost, looking at it through the lens of Chaikin Analytics, we can see that the fund does have a very bullish ETF power gauge rating. And look at the ratio here. 20 bullish or very bullish stocks for 7 bearish or very bearish stocks at the holding level of ITB. What I see is a steady uptrend that recently made a new high, trading above a rising 200-day moving average in a move that has been confirmed by momentum as the RSI has routinely become overbought, does not become oversold, and actually does hold in bullish ranges on pullbacks. Taking a look at ITB relative to the S&P 500 in the bottom of the chart, you can see a nice steady uptrend. Uptrend line has acted as support to some recent pullbacks, and it is beginning to move higher once again. So if I'm looking for potential opportunities based on what's happening across asset classes, lower yields appear to be having an impact on the home construction group. There's 20 names within that group that have bullish or very bullish ratings where you can dive deeper. And the way that you'd be able to do that is by taking a free 14-day trial to Chaikin Analytics. Head over to ChaikinAnalytics.com /test drive to sign up for that trial. You'll be able to drill down on a group like ITB and look for those setups within those 20 bullish and very bullish stocks. Have a great day, everyone. I'll be back tomorrow.